Hey, it's been a few weeks. It's Simon J from Compare Recruitment Factoring for Recruitment Funding 10, and today we've got Marcus Carolan from Lloyds Bank Commercial Finance. I'll let him introduce himself, but enjoy. Got Marcus Carolan from Lloyds Bank Commercial Finance today. Marcus works quite heavily in the recruitment market. I'll get him to introduce himself. He has much better hair than me. He hasn't had the lockdown trim, and I know he was desperate to go to the hairdressers as soon as he was allowed, unlike myself. So look, I'll hand yourself over to Marcus. Marcus, thanks for joining us. Give us a minute. I guess, your background with Lloyds, and we'll jump into those couple of questions we're talking about.
Thanks, Simon. Thanks for inviting me on as well. I know it's been a while to get us to.
Thanks for doing your hair as well.
Yeah, absolutely. Thanks for mentioning the hair and obviously pronouncing my surname correctly as well. So that's always a good start. But thanks obviously for having me on. I suppose a bit about me. So I joined Lloyds back in 2003, fresh-faced within business banking. So looking after a portfolio of clients at the time.
The first ever bank, the first financial institution you'd ever worked for, the first job was with Lloyds?
It was my first sort of banking job.
Wow.
Prior to that, I was working in recruitment, funny enough, before that. So
I remember you telling me,
spent a year working for a headhunting firm, just kind of grafting out really. So it was the 100 calls a day, assume need calls, and it was an interesting time actually. It kind of opened my eyes and pretty learned a lot from that into what I'm doing now. So I kind of do understand the pains of the sort of the call volumes at the time, but I got a lot from it actually. I had a decent boss, and it was one of those times where we'd do so many calls, and then the next day we would then have an hour of listening back to those calls to critique them, which was cringeworthy, really.
I bet times change now with technology. From what I don't know, what you're using, a gramophone then or something to listen back to them.
It was a gramophone. Yeah, he had like an earpiece going on, and we just had to kind of like see what we do. But
And then you jumped to Lloyds, and so your Lloyds career, 2003.
2003 started, so business banking, covering sort of down in the southeast, and then got to the point around 2011 that I just wanted to move into something different. And I've always seen, our invoice finance guys swanning in and doing what they do. So
big Mercedes and
nice suits, so looking the part. But I got bumped into to one of the guys there, got chatting, and got the role as an invoice finance manager covering London primarily, and then sort of went down into sort of southeast and wherever the business is really. But so never looked back. Really enjoyed it. I just like sort of specialising in a particular area and just kind of learning as I've gone along really.
Nice.
Some really good education along the way.
It's good, and it's good to have the different. We've spoken to quite a few independents, and it's nice to have a large clearing bank. Lloyds, obviously a name that everyone, I'd like to think, knows. So these questions be quite interesting coming from yourself as well. So what we'll do, let's jump into the first one, I guess. I've done two for you. You've got one for me. Similar format. We'll whiz through them and see what the Lloyds view is on it. And I know Lloyds work heavily in the recruitment market, and they have done sort of from my time in IF, etc. And how I know you is because we competed against each other quite heavily when I was working in invoice finance. We won't say the stats, so I think you did slightly better than me, but there you go. First question is talking quite heavily about pay and bill funding. So we get a lot of new start recruitment business, smaller existing. They use the pay and bill funding, works really well for the business. Some people use for the larger. Some make the decision to move away from that in time. So go from a pay and bill funder, the timesheets, the back office, into either a factoring or I guess an invoice discounting arrangement with an independent funder or a clearing bank, etc. My point was, I guess, 3 tips from you, because you probably do this reasonably often, on what tips you give to those recruitment businesses that are making that change, because it is quite a big change, but is it as scary as it should be? And what are your 3 tips, I guess?
It's a really good question. I think the scariness I'll sort of come on to a little bit later perhaps, but I think it's something that we see a lot of, especially within Lloyds. We're supporting clients from sort of startup positions up to 25 million in the SME market, and then beyond that, in terms of the mid markets as well. So a real growth curve there that we can support clients with. So, where we're seeing clients perhaps moving away from sort of pay and bill type providers, who do a great job, by the way. I think that it absolutely serves a purpose for a recruitment business. But I think there naturally comes a point at which it perhaps becomes a bit more expensive than it needs to be. And I think, when they're looking at moving away to perhaps a more mainstream provider like Lloyds or whoever else in the market, then I think sort of my sort of first point would be around sort of planning and writing down what it is you really want and what it needs to look like going forward. I know a couple of other guys have sort of mentioned the planning word before, but I think it's really important actually to say, what do I want from my provider, and what does that look like before I then go out into the marketplace?
Absolutely.
The kind of level of support. I mean, again, talking to your accountant helps a lot as well. So gaining their support, because if you're coming away from using a pay and bill provider, obviously you haven't got necessarily the support of them doing all the invoicing and
who is doing it is a really good question. So yeah, absolutely. There's a lot of accountants that do it. There's a lot of sort of standalone pay and bill without funding providers, FDs, etc. that do that service. That's a really good point. And how will that process work with them? So I always say, have the conversation about the invoice discounting, but how are you going to fit that second piece in the puzzle?
Yeah, absolutely right. It's a big change suddenly. You're having to wear a finance hat on as well at the same time. So now, not only are you running your recruitment business, but you're having to sort of manage the finances. And this year, obviously, you're going to bring someone in to support that. Absolutely. But it is a big change. So I think plan and write down what you want from your provider as the first point. Which then sort of leads on to maybe the second, which is researching the market, and it's talking to the likes of yourself.
I didn't even tell you to say that, but
I know, you can pay me later, but it's fine. But it's important. I think, someone like yourself will search the market, look at the providers out there who perhaps sort of best fit your client, because you'll know your clients as well. But,
absolutely. I think a common misconception, I'm jumping on your question a bit, but this is a really interesting point. Common misconception in market is that they move from pay and bill to ID because it's much cheaper. But actually, there's so many different ID providers out there, and actually which one's going to fit it best, depending on the sector, depending on the high involvement, depending on the flexibility. And every sort of provider works in a slightly different way. So actually just saying, we're going to move to ID, we're going to go to X is the wrong thing to do.
Yeah, absolutely agree. And you mentioned it's a really important point. The pricing, and let's face it, the difference between pay and bill and a mainstream is remarkably different. But
sometimes, not all the time, but a lot of the time, yeah.
Yeah, it's true. Yeah, and I think you do get what you pay for along the line as well. So the pricing is important. I don't always think it's the clincher as to why people move. I think there's a lot more behind it. And I think that's builds in nicely to my third point, which is about when you find that funder, it's building rapport early with them as well. We talked about the pricing, that's important, but actually you've got to get on with these people, and actually on a one-to-one basis. When you then have a new client manager that takes over, one thing that I try and do is actually introduce the client manager that would be potentially looking after that client early doors, so they can actually have a conversation, make sure they get on well, iron out any kind of extra operational kind of questions they might have, but just kind of building that rapport early, so they're comfortable with that person.
It's a really valid point, and it's something that's come up for me this week actually. Someone was torn between two providers. They really liked the sales process of the one provider, and I guess the advice I gave them was, look, don't buy from the salesperson. I know it's the wrong thing to say, but please don't buy. Who's going to be running the account on a daily, weekly basis? And if you can have a call, have a Zoom or whatever we do these days, 15, 20 minutes with that person that's going to be running your account, that will make your decision for you. And I think it's a misconception in market that people, but there's some really great sales professionals in this industry, and that do a really good job, but they're not the people that are running the account on a daily basis. So I guess your 3 tips and my sort of quarter of a tip is, if you can, talk to who's going to look after that account before you sign on the dotted line.
Yeah, absolutely right. Yeah, and that's the long-term relationship, isn't it? That's what they're really interested in. Is pricing, of course, but am I going to get on with these people? Are they going to support me going forward as my business hopefully grows? And from our point of view in sales and bringing on clients in the first place, it's about being open and honest around the kind of relationship they're going to get from their provider, but actually showing them for real, saying that meet the guys, meet the client managers, and work it out for yourself, and make sure that you get on. So it's a really good point. Yeah.
And what we have seen in the market, I'd certainly say it's in the last 5 years for me, and we're going on with this a bit, but I'm really enjoying it. there used to be, I think, back in the day, a bit of a sign and run away ethos in the IF market. So really good salespeople on the road, sort of, but not sort of looking after and nourishing that client as much once he comes on board. But what I've seen for the last 5 years is that the sales professionals are still involved with these clients when they're moving on, not on the day to day and the things like that. But I'm sure you're still in touch with clients that you've done X, Y, and Z, and even if it's just for a friendly call, even if it's just to create a relationship. The salespeople are probably more ingrained into that ongoing than they were before, I probably believe.
Yeah, I do agree. I think there's a lot more that comes from it as well. I think people buy from people. It's an old saying, and I think, actually, if you do a good job and you do keep in contact and have a genuine interest, then, the phone often rings and it's somebody who's been referred to you by one of the people that you've had brought on in the past. Absolutely. And that's great. That's a great way to get business. Hopefully that means that you've done a good job. And
because you've done the right thing. Absolutely.
Yeah, absolutely.
Question 2 should be a simple one. I think I know what you'll say, but we'll wait for it to come. Major differences for a recruitment business using either a clearing bank like Lloyds for invoice finance or an independent. What do you see those differences as? Good and bad, etc.
Yes, it's a good question. It's one that I think probably comes up quite a lot when we're talking to clients as well. I think there's probably mixed perceptions out there in the market. So some clients who think that it's better to keep the two separate, not all eggs in one basket and all that kind of mentality, but there's others that really enjoy that kind of level of support and relationship with their bank. So I think when I talk to clients, a lot of the time clients will actually switch their banking over to Lloyds as well as a result of the conversations that we have, because they're perhaps not aware of the level of support that we can provide. So I suppose a typical example would be if we're looking at supporting a client with invoice finance, well, actually we've now got access to supporting them on their main banking, which is important, and the relationships that drives as well. But things like asset finance, trade finance, that type of thing as well, perhaps they've not really considered in the past, or they've had to go to other providers for that, whereas actually it's all under one roof, with Lloyds. So we can provide that kind of level of relationship. And I think that's why people like to use the same bank as their invoice finance providers if they can. So certainly most are open to a conversation just to find out more. But yeah, I think there's certain advantages around that. And again, it's just based around that whole relationship piece really that Lloyds is very, very much about. We want to look after our clients, and the banking relationship forms a major part of that as well.
And a lot of it must be based on people's personal views. So for argument's sake, I bank with a major high street bank, and I always have, and my family always have, and I probably don't get the best interest and probably don't, but it's ingrained in me, and that's kind of what, and there must be a level of that with you, with people using you, but also people using you for banking and invoice finance, that they're thoroughbred Lloyds customers.
Yeah, 100%. And I think, again, it's about, I suppose, experience and reputation as well, isn't it? So,
I love it. It sounded of it. I absolutely love that. I won't ask what it was, but brilliant.
So that's obviously a sign.
There you go. Yeah, so change the question. Next question. Yeah, no. I'll go on.
What was that noise in the background? What was the question?
yeah, that's fine. Well, clearing bank and the major differences for recruitment businesses, which we've covered, which is good. I'll jump on to, I'll pass it to you so you can ask me the one question, and we'll take it from there.
Yeah, I was going to just ask you, in terms of your experience of dealing in the marketplace, what is your perception and experience of what recruiters think of the finance or the invoice finance industry as a whole, versus the reality? I think there's people out there perhaps a bit nervous about using it, or perhaps have heard myths around invoice finance. So what's your view on actually, invoice finance as a reality?
There's a few points. Now, I deal quite a lot with, new start recruitment businesses sometimes, and often startups don't even know that there is invoice finance there. So they've worked for a recruitment business, and their contractors have always been paid. They've never really seen that back office in essence. But when they're set up, actually, we didn't even know that this sort of thing existed, whether it's pay and bill funding, ID, IF, etc. So firstly, it's the actual education of that this is what works, and it's very, very normal for businesses to be using it. So often it's the case is is it normal? Do people use it? Very, very normal. And then it's explaining it. And then I guess as they become more educated and they're using a facility or they're changing a facility, the biggest perception is that it's just totally jargonized. And I think the market is way behind some other markets on jargon. There is so much jargon in this market, which is hopefully where I add a bit more value. But the words that are used, if you've never worked in the environment, and if you looked at some of these words, concentration, just jargon that means nothing unless you know what it means, recourse period. And it's educating that. And I guess once they get into that, I think the actual perception of the market, if people understand it and they have the right facility for their business, it's a great perception of the market. But I still think there's negatives where people haven't made the right fit or gone with the right supplier that doesn't maybe fit their business, where it creates that negative perception. But I think overall, and I've seen it even more over the last 5 years, people get it, it's working. And I think Flunders have become more flexible. I don't know what are your views on that, or what recruiters think of it as well, because I put mine back on you, because you obviously meet with a lot and talk to them a lot. Do they get it? Do you find yourself de-jargonizing everything?
I do. I think I just try and keep it simple as I can, really. I think that's important, especially if you've got a busy recruiter that just wants to get on with running his business. And a lot of the time, if we're looking at a startup business and helping them, then our jargon won't mean anything to them anyway. So it's keeping it really, really simple, even through to the well-established businesses. It's making sure that actually they're getting the best value, out of their facility.
And they're using it correctly.
Yeah, using it correctly. I mean, they're very busy people, so they just want to make sure that actually it's being used properly. But I mean, a good example, I dealt with a pay and bill client that we've just brought over this week, in fact, and I asked him today. I just said to him, look, I'm coming on to this with Simon, to be interested to know his views on it. And when he started out, he actually signed up to a pay and bill provider. It was the right thing for him at the time, and he was sort of told that he could get on with running his business and they would take care of everything else. Yeah. And I think he thought that maybe using someone like us as a mainstream provider would be a bit scary. He wasn't quite ready for it. But his perception of that process of moving across, he's been with us a week now. And actually, he said it's not as scary as he thought, and he can manage the systems easily enough. He's now chasing his clients and getting a bit more involved. He'll get someone in to do that, but at the same time, he's actually found that it's a very straightforward process. We try and make it as straightforward as possible. The important thing is helping the client sort of come on board, but actually then hand-holding them afterwards as well.
100%. Yeah.
So it's not just taking them on and dropping them off. It's look, we're in it for the long haul here, so look, we want to try and support you, and that's the important part, I think.
It's a major process change that shouldn't be too complicated, and isn't if it's managed correctly. And that's what we say. Yeah, and I can remember a large pay and bill customer into invoice discounting at Christmas, and it was industrial temps, and there were 600 temps a week being paid, and they transferred on the week of Christmas Eve. So they ran their first payroll on the week of Christmas Eve, and I was sort of like, well, we sure want to do this. And it went smoothly because he had the accountant there, he had the processes in place, and he'd already run a number of dummy runs before doing it. So he knew the process. And that's probably my last tip of the video, which is a joint effort today, Mark, because I love this. I just wish my hair was as smart. Plan and do dummy runs.
Beard,
Okay. It's a little ginger at the moment, but there you go.
I didn't
do dummy runs before you move. And this is something I'm seeing happen more. Run something in sync. If you're moving from pay and bill to ID, factoring, etc. Run a month of dummy runs. Do 2 runs. Yeah, it might take you twice the amount of time, but actually, that when you do that 5th week and it's your real week, it's there and it's done. And you know it's working. So
it's absolutely good advice. It's crucial, isn't it? It's crucial time. Running payroll and paying contractors is such an important thing for these recruitment businesses, because if they get it wrong, that could be potentially the end of their business. If they haven't got these contractors on board, then you lose faith. So yeah, you're absolutely right.
And that was drilled into me from the start of my career. And the most important thing for a recruitment business and a funder is that those temporary workers, contractors, get paid every week. If those, that's the most important thing, and making sure that happens is absolutely crucial. So, look, Quality. Really enjoy you coming up. Thank you very much. I know you said was your camera straight at the beginning, and I've been looking. I think the worktop is my OCD is kicking in now, and I think you're about 3 feet out. I've just worked it out. But no, thanks for jumping on, Marcus. It's meant to be one of the hottest days of the year tomorrow, so enjoy that. And probably by the time this video goes live, it will be raining. So hopefully it's not. But yeah, no, thanks for joining us, and we'll catch up soon.
You're welcome. Take care.
Cheers, Marcus. See you.